Right now on the New York Stock Exchange and Nasdaq, there are real companies trading for less than the price of a large pizza. Not sketchy penny stocks, real businesses with real earnings and real analyst coverage from firms like Zacks and Bank of America. Some of these have already gained 200%, 400%, even over 1,000% in the past 2 years, while still trading under $10. The question isn't whether cheap stocks can make money, it's which ones deserve your attention right now, and which are cheap for a reason that should scare you off. Let's break it down. Markets in 2026 are volatile, and a lot of the obvious AI and tech winners are priced for perfection. That's pushing smart money towards smaller, under-the-radar companies, quietly posting earnings beats and analyst upgrades before the crowd notices. Don't confuse the two. Penny stocks trade under $5, often on thin, illiquid markets, hyped on Telegram and Reddit. Cheap stocks are exchange-listed companies on the NYSE or Nasdaq that simply have a low share price, sometimes because they're small, sometimes because a solid company never split its shares. Price alone tells you nothing about value. The business behind the ticker is what matters. Before buying anything, run it through this checklist. Is revenue and earnings improving year over year? Are analysts issuing buy ratings or raising price targets? Why is the price actually low? Temporary sector weakness or real business decline? Is it liquid on a major exchange with solid volume? Does the chart show bullish momentum like a golden cross? Is the company riding a real sector tailwind, not just hoping for a turnaround? If a stock fails most of these, walk away. No matter how exciting the story sounds. Healthcare services, home care and hospice companies benefiting from an aging population choosing lower cost care. Energy storage and infrastructure, battery and grid companies riding the renewable energy boom. Established consumer and financial brands that got temporarily beaten down but have solid cash flow. And international companies listed on US exchanges offering exposure to fast-growing markets abroad. Build a shortlist using a free stock screener. Filter for sub-$10 stocks on major exchanges with improving earnings. Run each through the framework. Read the actual earnings report, not just headlines. Size your positions carefully. Never put life-changing money into one small cap. And decide your exit plan before you buy, not after. Volatility cuts both ways. The same stock that can double can also crash. Liquidity can dry up fast. Not every cheap stock is undervalued. Some are cheap because the business is genuinely struggling. Analyst price targets are forecasts, not guarantees. Diversify. Don't bet everything on one name you fell in love with. Comment which stock or sector you want me to break down next. I read every comment. If this helped, hit like. It helps this reach more people learning the right way instead of chasing hype. Subscribe and turn on notifications. I drop new market breakdowns every week. And share this with someone who thinks investing needs thousands of dollars to start. It doesn't, and this video proves it. This video is for educational purposes only and is not financial advice. Always do your own research before investing.